Welcome to Spidell's California Minute. I'm your host, Catherine Zidane, and this week we're covering how the pass-through entity tax affects California tentative minimum tax. We're covering this AB 150 provision in depth at our federal and California tax update webinar, where the discussion will include several examples. You can see a full list of dates and get registered at caltax.com. The pass-through entity elective tax credit does not reduce a taxpayer's California tentative minimum tax. This means the benefits of the credit may be limited for some taxpayers, especially those with larger amounts of income from their pass-through entities. And because the credit carry forward is limited to 5 years, this could create problems for some taxpayers. It's possible there will be a legislative fix to the tentative minimum tax limitation, but that wouldn't happen until sometime in 2022, and we can't be sure that it will happen. Since we don't know whether we'll get the fix or whether it'll be retroactive, taxpayers should consider this limitation when deciding if they should make pass-through entity tax payments for the 2021 taxable year. When calculating tentative minimum tax, a qualified taxpayer can exclude the income, positive and negative adjustments, and preference items attributable to any trade or business. Only individuals and trusts that meet the following criteria qualify for this exclusion. They own or have an ownership interest in a trade or business, and they have aggregate gross receipts, less returns and allowances during the taxable year of less than $1 million from all trades or businesses for which the individual or trust is the owner or has an ownership interest. Gross receipts include, but are not limited to, items reported on federal schedules C, D, E, other than income from a trust, or F. It also includes items reported on Federal Form 4797, sales of business property, figured in accordance with California law, or California Schedule D1 if they're required to complete it, that are associated with a trade or business. In the case of an ownership interest, include only the proportional share of gross receipts of any trade or business from a pass-through entity. This limitation creates several tax planning issues for taxpayers considering making this election. First, it makes a proper estimate of income much more important. Instead of rushing to make a payment before the end of 2021 based on an estimated tax liability for 2021, practitioners may want to consider waiting until next year so they can make a more accurate estimate of the tax benefits. Remember, though, for federal purposes, a cash basis taxpayer will not receive the federal deduction for the 2021 year if the payment isn't made until 2022. Second, practitioners will have to run full projections for clients to estimate the tentative minimum tax limitation. Trying to rush those projections before the end of the year with limited information could be problematic. And third, taxpayers should consider not just their income in the current year, but what they expect in the coming years. This tax does not have to be paid every year, and with only a 5-year carry forward, you don't want clients to lose the benefit of any tax that was paid in. Some taxpayers may benefit from not making the election every year, so they ensure the use of the carry forward credits. Like the mental health surcharge that's applied to income over $1 million, the $1 million gross receipts threshold applies per return. This means that a married couple could file married filings separately, and then each spouse would have a $1 million gross receipts threshold to potentially exclude their pass-through entity income from the tentative minimum tax calculation. But keep in mind that if the couple files separately for California, they generally also have to file separately for federal. California legislators are evaluating a legislative fix to eliminate the tentative minimum tax limitation, as they've done with many credits in the past. If this issue is impacting you or your clients, let your legislator know that the SALT workaround isn't working because of this limitation. To find your legislator's contact information, go to findyourrep.legislature.ca.gov. We'll also have an expanded discussion on this topic in the upcoming quarterly tax update on Tuesday, October 19th. To get registered, go to caltax.com and click on webinars. That's all for this week. Join us next time for another episode of Spidell's California Minute.